Now that we're seeing, the expectations for the Fed changing more aggressively to a 50 basis point cut in September, does that change the way you think about the Bank of England?
Look, I think what was interesting, obviously the Bank of England delivered their first cut last week, but I would characterize it as a fairly cautious and a hawkish cut. I mean, firstly, quite a few members were, quite close to cutting. It was a very close vote. It was 5-4. And also they said that, we're not going to cut rates too quickly and too fast. And I think the issue in the UK is that we still have fairly persistent, domestic services inflation in the UK. Wage growth is much higher than what is there in the US. What's there in the Eurozone. So I think UK has more risks of persistent inflation problem. And I think the Bank of England is quite aware of that, which is why last week they said we're going to go quite gradually. We are going to be fairly data dependent. Now, so obviously I think, they are influenced by what's happening globally and market pricing of the Fed. But what would be more important is how the UK economy reacts. If we do see similar issues with the labour market in the UK, which so far we haven't seen, I think that's going to determine the UK story more than what's happening with the Fed.
Okay, so what does this most recent cut mean for the growth and inflation outlook moving forward? You say basically the BOE is going to be detached from the shifting expectations around Fed cuts. So what does it mean for the numbers on the ground here?
Yeah, so I think the rate cuts are going to eventually have an effect, but I think you need, I think policy is still fairly restrictive even with this rate cut, which is a point that the bank was trying to make last week as well. So in terms of our expectations ahead, we agree that we expect another rate cut to come in November. We have 4 more rate cuts next year, but I think the risks are that the BOE delivers less number of cuts than that, just given the persistence of domestic inflation that we are seeing. And in terms of the growth story, I think the data, as I said, right now there's still some impact of policy tightening that's in the system, which will probably reduce over time. And eventually, as the rate cuts become more aggressive, we might get a more boost to growth coming from there.
Are you surprised by the reaction that we've seen in the pound after this most recent BOE move? And what's your outlook mid to long term for pound sterling?
Yeah, I mean, look, I'm not an FX strategist, but I do think that, the fact that the pound would obviously be determined by if there is a divergence in the monetary policy story between the UK and maybe the Fed. And over the last few months, we've seen pound appreciate on the back of, again, political stability, a more positive sentiment around the UK. And I think that actually helps the inflation dynamics for the UK. So if you have higher pound, that means core goods inflation comes down as well. So that actually helps the Bank of England, but we need to see how sustained the move is, whether it's something that can be, it's going to be a long-term move or a short-term move. But I think that the outlook of the pound depends on the monetary policy divergence between the two.
Yeah, absolutely fair.